Hi guys, good evening. Lovely to see you guys all again. I hope you have all got over the shock of doing your first assignment. And you now feel a little bit more relaxed and confident about going into the rest of the semester. On the whole, the assignment marks were actually excellent. So the majority of you, and if I'm just looking at my mark sheet now quickly, the vast majority of you passed the assignment and actually passed it very well. There were plenty of you that got distinctions. I was very impressed. You guys clearly did understand what you were doing. And I could see, and it was perfectly understandable, those sections where you battled a bit. But that's perfectly understandable because there should always be, particularly at your third year level, areas where you need to work hard to get those marks because it's a matter of applying the theory. In third year, they don't just give you questions that come straight out the textbook and all you have to do is copy them. So this first assignment is a really good example of the way in which you are going to be expected to answer questions, and your exam will be, I haven't seen the exam paper, so I'm not saying it, but from all the years of doing the exams with the Finance 3, your exam paper will be along those same lines. Okay. So now you know what to expect. So just to kind of give you guys just a little bit of background and where we are, etc., is this week that we are in now is week 7 of the semester. So you know in the PACER, we've got 12 weeks allocated to going through all of the learning units. And then we go through to week 16, which is then immediately before the exams. So we're just coming up to halfway through the semester towards the exams. So you guys, and I do really feel for you guys, you guys had your first assignment with a very early date. But your second assignment, you have now got a long time to do that. That's only going to be due on the, where am I now? On the 11th of May. So your assignment 2 is going to be on learning units, as you can see on the screen, 3 to 5. Oh, sorry, there's just something on. Okay, there we go. Learning units 3 to 5. And the due date is the 11th of May, according to the last PAS that I looked at. So remember to always check that. Okay, so that's what you're working towards now. Learning unit 3 to 5, you must have mastered it, obviously at least a full week before the 11th of May, so that you can then do the assignment. And our very next collab after this evening, we're going to have one on Monday the 17th. Next collab is going to be Monday the 17th, so that's this coming Monday of April. And that's mainly because this evening we're going to spend our time getting feedback on assignment 1, and then tonight we'll then put assignment 1 to bed, and then from Monday we're going to start working towards assignment 2. So Monday the 17th is just a normal collab where you can ask me questions, anything that you're battling with, anything that you want me to cover. We'll do that on Monday, and then after that, on the 3rd of May, will be the national support session for assignment 2, which is where we then go over my hints and tips for the assignment and the assignment 2 question paper. So that's our plan for taking us up to assignment 2. Okay, so we know we're in week 7. You know when the next collab is. You know when your assignment due date is. You know what it covers. And what we're going towards there. Then the other thing that I just wanted to let you guys know, I'm sure you guys have all seen already that your marks for assignment 1 have been released. So I went and checked, and head office has released the marks. So you can go and read those. So any of you who are wondering where your marks are, if they're not visible and you did upload an assignment, that is because you were one of the late submission students, and those assignments must still be marked. I'm currently marking a different module that had a due date just after yours, and I must mark those first before I go and mark the late submissions. So the assessment center is aware of that. So don't panic if your mark's not there and you did upload it. You must have been one of the late students. I think I've got the last count. There were about 13 or 14 students that submitted late with permission. So that is still coming. What else did I want to do before we get into, okay, learn? I'll do that on Monday. Next collab. Okay, and then also I'm going to give you an ICE reminder. Don't get so distracted with your assignments that you forget about doing those 4 ICE tasks. Remember, we've got to get that 10% towards your 50% pass mark. You must complete all 4 ICE activities. If you complete all 4, you will get 100% for your ICE, and 10% of that is then 10% towards your module mark. We've done, we finished with that, assignment 1. So this is where we are going next and what you are working towards. So just while we are on the screen here, there is one comment that I just want to make that I noticed from assignment 1, and that is this financial calculator issue. I can tell by the way that you guys wrote out your answers on the assignment that there are very few of you who seem to have a financial calculator, or if you do have, you're not using it yet. I know one of the questions did ask you to use the tables, and you weren't allowed to use the calculator. But please consider getting a financial calculator before the exam and getting used to using it and writing out your answers in the financial calculator way, because that is definitely going to save you a lot of time in the exam, rather than you going to have to calculate the answers the long way around by using the formulas, which you absolutely may do if you prefer it that way. It's quicker using the financial calculator if you know how to use the financial calculator and how to write your answers down in the correct format. So that's just a suggestion. You can obviously ask me any questions about the financial calculator in between, and it's if you don't want to get one because you feel you'll never use it again, that's also absolutely fine. But then just remember, and we will get into that closer to the exams, it's quicker to write down your answer using the financial calculator format than it is to use the formula. Okay, so now I am going to go through the memo for your first assignment. So in order to do that, I'm going to share my screen because I've got the memo opened as a PDF. It has a password, so I'm not able to answer it within Blackboard. So for this next section, I will just be going through the memo on the open screen itself. Okay, so hopefully you can all see the kaleidoscope, and I'm going to go down to, let's just make this a little bit smaller. Hopefully you guys can now all see my screen. So this was your assignment paper. Referencing rubric which wasn't applicable to this particular assignment, and then here's all your questions at the top. So hopefully you guys have got your question papers with you, because I don't want to have to scroll back up to the question. I mean, I can if I need to. All of your formula sheets that were attached, which for your first assignment is really your tables. And then here we go through the memo. So I'm basically going to just give you some feedback to kind of like tell you how students did in most of the questions and where they battled, and that you can then also see what the answer should have been if you did get it wrong. So on the whole, this first question was done very well. On my answer sheet, I actually write down the marks that the students got for each individual question, and there were plenty of students that got 30 for this question 1, and then many that got just below that. Just taking a quick look, there were not many students that battled with this question, to be honest. Those students that did lose marks might have been made careless errors, either in the calculation of the cash flow or in getting the present value factor maybe the wrong way around slightly. You would have lost marks if you just added up or multiplied incorrectly as well. So that could just be due to typos or a little bit of carelessness. So I want you just to take note over here, the instructions to the marker as to how we have to mark these. So 1.1 was out of 18 and 1.2 was out of 12 marks. So in order to receive the marks and the subsequent method marks, if you have a look over here, you'll see wherever there is an M, that indicates that that mark is a method mark, which means that if you've made a mistake, in this case, in calculating the amount of the cash flow, if you made a mistake there, you would have lost marks here. But as long as you took whatever answer you got here and multiplied it by the correct present value factor, you could then get this method mark even though your answer would have been incorrect. So when I mark, because I'm marking online, I use the red tick if you have got the answer correct. And if you see a big red dot, that indicates a half mark. And that I only use that so that when I'm adding up your marks, I know a tick is a full mark and a red dot is half a mark. A red cross means you got something wrong, and if you see a capital M, then it means you got a method mark, and a small m, lowercase m, means you got half a method mark. So that's just so that you can interpret my marking. So you must match the cash flow, and you also have to match the cash flow with the correct present value or future value factor. So the first 1.1 asked you to calculate the present value, assuming that the cash will occur at the end of each year. So when we are calculating present value, we are going backwards from the, let's say that this line over here, let's say that this left-hand side of the line is the 1st of January and the end of the line over here is the 31st of December. So when we are calculating present value, and the cash flow took place at the end of the year, that means the cash flow took place on the 31st of December, and we are working backwards from the 31st of December back to the 1st of January. So that means that from the 31st of December to the 1st of January, the cash value that we had one whole year in which it lost value, because as we go from the future back to the past, the amount gets smaller and smaller and smaller. We we divide a future value to get to a present value. So the future value is divided by until we get to the present. So a present value is always smaller than the future value. So here we can see that the cash flow from year one was 18.5 million. But when we have multiplied it by the present value factor, we have taken that cash flow which was received on the 31st of December, and we have taken it all the way back to the 1st of January. As at the 1st of January, it is only worth 15.947 million. Okay, most of you got these present value factors the right way around. A couple of you made errors with the calculation of the cash flows. So just have a look at these calculations and see where you got it incorrect. Because you just have to follow the instructions where year two was a 12,000 Rand increase from year one. But remembering that year one was a negative 18.5. So you take in a negative 18.5 and add in a positive 12, which still leaves us with a negative 6.5, and so on and so forth. And then a couple of you also forgot to add up the total. So you need to calculate the present value for each year. And then the present value for the series of cash flows is then the total of those amounts added together. You also have to make sure that if the cash flow was negative, your present value was also indicated as a negative with brackets around it. And in this case, your final present value was negative. So you would have lost marks for no brackets, not indicating negative, etc. And then part two of the question, they wanted the future value if the cash flow took place at the beginning of each year. So remember again, if we look at this line on the screen, and this first row is 1st of January on the left-hand side and 31st of December on the right-hand side, the cash flow was given to us, or we were in possession of it as at the 1st of January. So if we value that cash flow on the 31st of December, in other words, we are future valuing it as at the end of the year, that cash flow will have grown by by 16% in this case throughout the whole year. So by the 31st of December, we would have our initial capital plus 1 year's worth of growth or interest. One common error that was made in this particular question was that the students identified the correct factors in terms of this factor here for 16%, but they got them the wrong way around. So for year one, they had 1.16, and in year two, they had 1.346, and so on and so forth. Remember here, we are going from the present to the future. So year one means at the beginning of the first year, I received my 18.5 million. I want to know what the value of that 18.5 million is at the end of year 7. So that 18.5 has grown from the beginning of year 1 throughout year 1, 2, 3, 4, 5, 6, 7. So I am multiplying that 18.5 million by the 2.826 because the money I received at the beginning of year 1 has grown the most because I was in possession of it for the longest amount of time. The money that I received at the beginning of year 7 only grew for 1 year. I had it at the beginning of the year 7 and I want to know what was its value at the end of year 7. It only grew I had time to grow by 16%. Okay, does that make sense? That was one common error, the most common error from question 1. 1.1, no problem with the factors. 1.2, a lot of students got this factor the wrong way around. If you got the factor the wrong way around, you would have lost all of these half marks here for the incorrect factor, but you would have then got the method mark for doing your multiplication correct. And even if you got some of these cash flows incorrect in 1.1, you were allowed method marks for those cash flows. So as long as you used whatever you used in 1.1, and you multiplied it by the factor that you got, you would have got this method mark and this method mark, even if you lost the mark for the factor. Okay. I just want to go back quickly and check that there are any questions. Okay, so you guys can also listen back to this after you've finished, if there's anything you don't understand, and then you're welcome to send me a question about this that we're going through now at some time in the future during the week as well, or when you're doing an exam revision, etc. Okay. All right, so then let's just take a look at question 2. I am trying to talk quickly just so that I don't take up too much of your time, otherwise the recording is going to be super long. But please stop me if you have got a question, type it in the chat box and I'll catch up with it when I go back to that screen in a minute as well. So our question 2 was probably the question where the students lost most of the marks. I'm just sorry, I'm just having a quick look at the answers, the marks that the individual students got for this question. So there were more marks lost in question 2 than there were in question 1. So this is our EVA question. So the full question was out of 40 marks, 20 marks for 2.1 and 20 marks for 2.2. So for 2.1, you had to use the information provided and calculate the EVA as at the 31st of December 2021. So just make sure you were doing it for the correct year. So 2.1 had to be 2021, and then 2.2 was 2022. So this one was straightforward. They just gave you the information and they just wanted you to calculate the EVA. So in order to calculate the EVA, we have to do 2 separate calculations. The one is the calculation of the NOPAT, where we start with our profit after tax for the year and then we make our adjustments to get to the adjusted profit. And the second calculation we have to do is the calculation of the invested capital, which again, we take our equity and interest-bearing loans as at the beginning of the year and we make our adjustments to those to get the adjusted invested capital. Once we've got those 2 amounts, we've got our little EVA formula, which says that EVA is equal to NOPAT minus adjusted investment capital multiplied by the WACC equals EVA. So you can see for this EVA calculation, those are all method marks, excepting for the calculation of the WACC, which you all got correct. So no matter what answer you got for the NOPAT or for the invested capital adjusted, you probably all got these 5 marks for the EVA calculation if you had the formula correct, which 99% of you did. Okay. So then let's have a look at the NOPAT calculation. So for NOPAT, the first thing we have to do is we have to have our profit after tax rand value. So they were a little tricky in this question where in the table of the info that they gave you your revenue and your cost of sales. And then they said that the net profit is the net profit percentage before tax is 18.5%. So in order to get this correct, you had to remember your ratios from second year. And we know that our net profit calculation is that net profit is a profit as a percentage of our revenue. So we had to take the 18.5% net profit percentage and multiply it by the revenue rand value. Because the revenue was before tax, we then had to multiply that answer by 0.72 to get the after-tax profit. So they tested you on a couple of fronts there. Then we know that with NOPAT, the only other amount that we adjust and take after tax into account is interest. So the NOPAT rules state that any interest expense we recorded in our financial income statement, we must add back. So they told us we had 360,000 rands worth of interest-bearing debt at interest of 8.5%. So 360 times 8.5 gave us the rand value of the interest, and then multiply by 0.72 is the after-tax value of the interest, and that we are adding back to the profit after tax. Because remember, this calculation here, capital times WACC, is the interest calculation. So we are going to deduct the interest in this step at the bottom when we calculate EVA. That's why we're adding the interest back to accounting profit here. Then for 2021, NOPAT, we always add back to NOPAT any long-term R&D that the company had to expense according to IFRS rules. So the question told us in 2016, the company spent 900,000 Rand on R&D, and that was going to be amortized over 5 years. So that means 2017, 18, 19, 20, and 2021, that 900,000 R&D would have been added back in full in 2016 and then amortized over 5 years from 2016 through to 2021. So at the beginning, remember this, this is NOPAT. So in 2021, we would have taken the final fifth amortization of that 900,000 that we added back at the beginning of 2017. We always add back any non-cash. So they told us that, where's our information on non-cash? Credit losses of 80,000 we had in 2021. So that's a non-cash loss. So we're adding that back. And then also in 2021, they told us that the company invested 900,000 in December 2016 as well as December 2021. So here we are adding back the full 900,000 that was spent in 2021. We must add it back to profit in 2021 because we're going to capitalize it from, in this case, how many years did they say this was? Okay, both of them was 5 years. So this 900,000 that we expensed in 2021, we add back to NOPAT in 2021, and it gets added to invested capital from the beginning of 2022 and is amortized from 2022 for 5 years. So 22, 23, 24, 25, and 2026. This 900,000 will be amortized. So this 180 here is minus, it's the final amortization of the 900,000 that was added back in 2016. And then this 900,000 is the money that was spent in 2021 that we're adding back to 2021. So profit after tax plus interest expense after tax minus any amortization of any prior year R&D, plus any non-cash that was spent in 2021, plus any R&D that was spent in 2021. And then that gives us our NOPAT. There were a couple of students that did get that answer correct. Then our invested capital calculation. We start by looking at the statement of financial position and what equity and interest, long-term interest did we have. So 850 and 360, that came from the information that they gave us. And then we are going to make our adjustments to those based on the balance of any of these R&Ds that were added back in prior years. And then also remember non-cash that gets added back to NOPAT in 2021 will be added to invested capital at the beginning of 2022. So in this case, we had at the beginning of 2021, we still had a 180,000 Rand balance of the 2016's 900,000. So here it is in the opening balance of 2021, and it was then amortized to 0 in 2021. This 900,000 that we spent in 2021 will only be added back to invested capital at the beginning of 2022. Those are the rules. Then non-cash that was spent in 2020, remember this 75,000 would have been added back to NOPAT in 2020 and then added back to opening invested capital 2021. So this comes from 2020. And then that gives us our adjusted invested capital. And in this instance, none of this 900,000 from 2021 that was spent in 2021 appears in the adjusted invested capital for 2021. So those were the NOPAT and the invested capital calculations, and there's your EVA calculation. Hi, Norman. Nice to see you online. Okay, anybody got any questions on that calculation? I'm sure you're going to understand it after listening to me go through these NOPATs, adjusted NOPATs and adjusted invested capitals are very tricky. I remember also getting thoroughly muddled up when I first did these. And then the second one, 2.2, this question was a little trickier because in this one, they gave you the EVA, so they gave you the answer, and they said calculate the value of the equity on 1 January if the EVA was 1,020,000. So in order to do this calculation, you had to calculate NOPAT, because remember, if you go down here to here, this is the EVA calculation here. EVA 1020 is equal to NOPAT 1246928 minus invested capital represented by Z multiplied by WACC. So can you see where we're going with this? We still have to, this is our formula. They've given us the answer. We need to know what the Rand value of NOPAT is, and we need to know what the total value of Z times WACC is, so that we can put that into this variable position. So you had to calculate NOPAT exactly as per normal. Profit after tax, so again, the 8 million times a 16% net profit percentage times 0.72 to get it after tax. Add back interest expense during the year, which was a loan of 440 at an interest rate of 8.5% multiplied by 0.72 to get the after-tax amount. In 2022, we did not spend any money on R&D. So add R&D was 0. Less amortization of any prior year R&Ds. The 2016 R&D has now was completely amortized in 2021, but in 2022 we're going to begin to amortize the 900,000 that was added back to NOPAT in 2021, because this is now added back to our adjusted capital at the beginning of 2022. So 900 divided by 5, the first of the 5 years worth of amortization had to come off here. And then the non-cash amount, what was the story here? They told us that our credit losses were 80,000 in 2021. So in 2021, we added back 80,000, but that in 2022, our credit losses improved by 30,000. So in other words, our credit losses were 30,000 less than they were in 2021. So 80 minus 30, our credit losses in 22 were 50,000. So we had to add back the 50,000 amount of the credit loss, which is a non-cash amount. And then that gave us our NOPAT amount. Then we did this calculation in order to get a value for Z. So just have a look at, again, you can go over this in your own time in terms of the algebra. So we've got a RAND value for NOPAT, we've got a RAND value for EVA. We are representing total invested adjusted capital by Z, and WACC is 7%. So if you have a look over here, we've then taken the variable that, the portion of our equation that has the unknown variable Z, we've put that on the left-hand side of the equation. So Z times 7% equals, and then we've got the 1020 on the right-hand side of the equation, and we've moved the NOPAT to the right-hand side of the equation. So 1020 minus 1246, that would have given you a negative answer. They haven't put all the steps here. So we subtract 1020 minus 1246, we get a RAND value for that. We divide the left-hand side by 0.07 to get Z on its own, and we divide the right-hand side to get this value here. Both sides were negative, so we dropped the minuses. So we've now got positive Z equals 3241829. So what that tells us is that my total answer here for adjusted invested capital is 3241829. Okay, do you see what we did there? There were very few that got, a lot of you got a lot of marks for doing this calculation, but this calculation of equity was the part that you got a bit stuck with. I unfortunately couldn't give you the whole correct formula for doing it before the assignment, because that would be counted as giving you the answer. So I just was able to give you as many hints as possible. Okay. So now we're going to work backwards. Okay, the balancing figure. So equity, question mark. This one over here, equity had the question mark in it. Interest-bearing bank loans we know is 440. And we know that at the beginning of 2022, we are adding back the 900,000 that was added back to NOPAT in 2021. And the 80,000 was the non-cash that was added back to NOPAT in 2021. We must add that back to opening invested capital in 2022. So these three amounts here were knowns. We could calculate this total using algebra over here, and then this balancing figure is then the equity figure. Just one thing I want to just explain to you guys here quickly. I'm just been explaining the calculations. There were some errors in the memo. Unfortunately, I've only been given the memo as it was printed. Let me just see if I can just quickly, what's going to be the quickest way to do this. So this amount was wrong. It was a mistake. So that amount, so this amount would have changed. And then that NOPAT amount brought forward over here had to be corrected in the memo. That was correct. That was correct. And then, of course, this would have had to change, be corrected, and that would have had to be corrected. Then that amount over there had to be corrected, which meant that that amount was also different. Sorry about all of this, but this was the memo that was given to me when I was going through it. I picked up that there were errors, and they have obviously corrected it with the lecturers, but you guys don't see that. So that amount should have been 921,600. This amount here should have been 818,528. A lot of you did get that correct. That amount, 818,528, 818,528, which would have given us a Z equals, let's get my right page here, Z would equals 2.878171. So this amount, 2.878171, which means that this amount was 1.458171. Okay. So these changes to these RAND values were the corrections to the memo. But all the explanations that I've given you, 100% correct. It was just those RAND values that were incorrect. Oh, I didn't, 818,528. I'm sure you guys will pick that up. Okay. All right. Any questions about question 2? Anyone got any questions? Did you follow my workings? So far, so good. Okay, you can think about this for a minute just while I take a quick drink of water, and I just want to make a note here of something quickly before I forget. I'm just going to turn my microphone off for a second, but I am still here. Okay, my microphone is back on again. And everybody, so far so good. Okay, and then let's have a look at the third question. This one will go will go quicker than what we've been doing already. Most of you did very well with question 3. Here and there were some students that got quite muddled up, but on the whole, not too bad. The average was probably kind of like in the middle 20s, 20 out of 30, kind of more or less was the average for this question. So I did give you a lot of hints in our NSS for this one. And just have a look at how this question pans out from the beginning to the end of the question. So 30 marks for this question. Okay, so remember this was this chap who wanted to attend the Summer Olympics, And he was told what the current price of a flight to Los Angeles would be. He is only going to go to Los Angeles in 5 years' time. So first thing we have to do is work out what will the rand value be that he will need in his bank account in 5 years' time in order to be able to buy that ticket. So they told us over here, the ticket now, today, costs 25,000 Rand. Over the next 2 years, we're going to have inflation of 6.5% for 2 years. So the first thing we've got to do is what will the value of the ticket be in 2 years' time? So that's the 28,356 that we've calculated. Then in here, 3, 4, and 5. So for 3 years after that, inflation is going to be 8.25%. So we have to take our 2-year projection value and then grow that for 3 years at 8.25%. So that amount of 35969 that we get is the value of the ticket after it has grown at 6.5% for 2 years and at 8.25% for 3 years. So that is the amount, the future value at the end of 5 years' time. Okay, so that is the cost of the airline ticket. Okay, 2 years plus another 3 years. So this is the value after 5 years. Then they gave us additional information, the rest of the cost of the trip. So the cost of the tickets to the events that I'm going to go to, my accommodation and other travel costs are going to be $9,000. And that will be an exchange rate of 22.50 Rand in 5 years' time. So the 5-year future value of that $9,000 is an additional 202,500. So this is the cost of my airline tickets. And this is the cost of all of the other additional costs, giving me a total future value of 238,469. Now I know what the total amount is that I require. Then they said, I'm going to invest, what's the details here, 80,000 Rand in a fixed deposit. Fixed deposit means I'm putting one lump sum of 80,000 Rand in today, and I'm leaving it there for 5 years. And it's going to earn interest of 12% over the next 5 years, but interest is going to compound twice per annum. So remember, when we've got compounding multiple times a year, we use N times M for the number of years, and we use R divided by M for the interest rate. The N for Nelly is going to be 5 years, and M for Mary is going to be 2 because it's going to compound twice a year. So 5 times 2, and R is our percentage interest divided by M for Mary, which is 2. So in our calculation, we're going to use the value of 6 for the interest and the value of 10 for our value for N. And then we comp future value 143,268. So you'll see in this memo, they've used the financial calculator version of presenting the answer, which you can see is super easy. All you have to do is write down the variable, present value, interest, number of years, and then comp future value, and then the answer. So you can see how the marks have been allocated. So my total costs are going to be 238,469. I am only going to have in my possession from that investment 143,268. So the difference, the amount that I need minus the amount that I'm going to have, my shortfall is going to be 95,201. So the last question was, how much do I have to invest in a monthly annuity, so in other words, per month, from year 3 onwards? That means year 3, year 4, and year 5. So for 3 years, year 3, 4, and 5. So for 3 years, what is the monthly amount? So as soon as I've got an annuity, a monthly amount repetitively paid is a PMT. So we know what the future value is, which is the amount of the shortfall. We know the interest that we are going to get, which is the 16%. But again, we have to do R divided by M. And for the N, we've got to do N times M. And then once we've got those amounts correct, we can then comp PMT, and then that is the Rand value of the annuity, that if we paid 2079 into our annuity every single month for 3 years, at the end of the 3 years, I would have saved up that amount of 95,201, which then means I would have 95,201 from this investment. I would have 143 from that investment, which means I would then have saved up the total 238,469 that I need to pay for my airline tickets and all of my other expenses. So it's a really, very nice question. It's very practical. It's kind of like the old-fashioned story sums that you used to hate back in junior school days, but it really shows you how you have to work it all out logically, step by step. And you have to be able to identify, is the amount they've given me a present value or is it a future value? Are there multiple compounding periods in the year or not? Is there an annuity involved, etc.? Okay, so hopefully that this has showed you where you guys made your mistakes, which I must admit were not very many. You guys really did very well in the assignment. I was super happy with your marks. I hope you were too. So we've been just about almost an hour and a half, so that's long enough for everybody's concentration. So I am going to stop talking right there, and hopefully this has been, you guys have found this helpful in understanding where you guys went wrong for, okay. And I know probably all of the light bulbs are going off now. You're probably going, oh, of course, oh, yes, of course, why didn't I do that? As long as what I have told now makes sense to you and you understood why you got it wrong, then we're 100%. Okay. If there's something that you still don't understand, why it was done like that or how the calculation went, then just give me a shout afterwards in a message and I'll be more than happy to explain it to you. Or if you've got your assignment and you got muddled up with it. Okay. Okay, guys, that's all we've got time for this evening. And hopefully that's been helpful. So I will see you guys again on Monday for our next, it is Monday, right? I will see you guys again on Monday for our next general collab. So just let me know if there's anything specific that you want to cover on Monday. Otherwise, I will do my thing. Shabana, I am not allowed to upload the memo. We are not allowed to digitally share PDFs of memos with students. So you can see it on screen like this, but I'm not allowed to upload the memo, unfortunately. So you'll just have to come and watch this video again if you've got stuck with anything. But those are the rules. Okay, and then also one of the reasons why we're not allowed to upload memos is because they do often contain errors that we work out when we're doing the marking. As you saw in this particular case, there was an error in question 2.2. So if I uploaded the memo for you, you would be very confused because the memo would not be correct. Okay, guys, I'm going to stop the recording.